Welcome to this video on force index and on balance volume. Okay, so these are the two indicators which I am going to explain in this as part of this particular video. Okay, so both these indicators have one thing in common, where it is going to it is built based on the price as well as the volume. Okay, so both parameters are taken into consideration. So force index, what we will do is we'll compare the current market price with the previous market price and we multiply it with volume over the same period. Okay, for example, if you take 14 days, so we take the current price and the previous price and we multiply using the default or average value of volume over 14 days. Okay, so which determines the force index. So force index, why we are calling it as force indexes. So the total market transaction is depending on the number of volumes and price, right? So if there is a huge increase in the total transaction, so what that means is there are many people who are involved in this particular stock. Okay, so it has more probability where it can continue with the current trend. Okay, so whether it's a fall or it is an increase. Okay, so that's what the force index means. Okay, so what it does is it determines the momentum of a price. Okay, so if a particular stock decreases, but if the volume increases drastically, so what that means, so we have a lot of chances that the momentum of the price can increase. Okay, so if the particular volume drops on an increase on stock price, so what that means is the demand is getting dropped and we have more probability of a reversal. Okay, so this is how the momentum of the price, it determines the momentum of the price. Okay, so and how the price coincide with the volume, I have already explained now. Okay, so let us see how the chart looks like. Okay, so this is the force index. So force index, you can see that here you can see a huge spike in the volume and price. Okay, so the price decreases and the force index also decreases. Okay, here you can see that, and you can see the volume increases drastically. So we can you can clearly see that the reversal of trend happened here, because after a huge volume increase, so you can see that sudden increase in price. Okay, so this causes the line to hover over a particular point. So here, so if a particular line crosses this particular line, so what that means is, so there is no there was a reversal of trend. Okay, so if it goes from negative to positive, so what that means is that this particular trend got ended. Okay, so I'll explain more about the trend ending as part of the price action. So since I have already explained about the patterns, so here you can see that there was a breakout available here. Okay, so that is confirmed by this particular indicator. So that's what it means. And here also you can see that we can see increase in the particular stock price here, but you can see that there is no major breakout like here, right? So here you can see that there is no major trend breakout. So that's what it means. So what it means is there is no change in momentum. Okay, so that's what it means here. So if you are not crossing the line too much, so there is no breakout. So you can continue with the stock. So if you are holding, if you bought a stock here, okay, so if there is no major changes in the force index, what that means is you can continue holding the stock. Okay, so here you can see there's a small false proof, like a false breakout here. So if you would have bought here and if you would have sold here, you can see that there was a huge probability that you would have bought at 70 and you would have sold at 90. Okay, but what is the problem is, for a small breakout, if you would have sold, you would have missed the opportunity from 90 to 110 or 120. Okay, so make sure that you work on the volume indicator along with some other indicator to make a confirmation call. Okay, so this is about the force index. Then I'm going to explain about unbalanced volume. So it is also similar, but we have a small change here. Okay, so in the calculation. Okay, so here the logic is, so what it tries to predict is, so it tries to predict the price quicker. Okay, so in previous thing we have used the average volume indicator, so it might be slow in predicting the sudden change in trend. Okay, but in this here, so the prediction is going to be really quick. So how quick is, so if a particular stock price decreases than the previous day, so what we will do is we will decrease the OBV value, which is on balance volume value, with the volume. Okay, so if it increases, like it closes above the previous lows, like previous day's value, then we add the particular volume. So what it does is it provides the overall market transaction pretty quickly. So we'll see the indicator and see. So here you can see, so just I want to show you one example here. So even though you can see a small decrease in the volume, so here you can see there is no drastic fall here. Okay, so you can see the market is trying to like move up. Okay, so that's a, even though there is a drastic fall, you can see that. Okay, similar to here. Okay, here you can see that drastic fall happened here. Even though there is a drastic fall from like around 140 zones to 110 zones, so even though there is around 25% fall, you can see that we are stagnant here because the market is still in like uptrend. So that's what it means here. Okay, so and you can see here it was too flat from here because there is no real breakout. So we have already reached 130, and from 130 level we are trying to be stagnant at a single place. Okay, so there is no breakout till now happened. So here you can see a small surge from like 125 to 140. Here you can see a small surge. Okay, so this is what it means. So you can determine the trend based on the on-balance volume. So it is a really useful indicator when it comes to intraday as well as the short-term trading. So here I have shown about the whole year's graph just to show you an example on how to use. So don't worry, I am going to explain everything in detail about how to trade it in the intradays and also in swing trading in later part of the course. So thanks for watching. That's it for this video.